Hey guys, welcome to the channel. Happy Saturday. Indulge me for a moment. Today is a little bit of a dark, gloomy, rainy day. And I don't know if you're like me, but boy, it feels good just to sleep in a little extra on a Saturday morning in those type of conditions. And that's what I got to do today. So sorry for getting the video out a little later, but it felt good. I hope you're off to a great start of the weekend as well. Today's video, we're going to focus on the storage wars. So we know that in 2024, everything was focused and the world fought over GPUs. Last year, it seemed like everything was on energy prices and power. But as of this year, we have kind of hit that storage wall, that final wall of storage in the AI demand. We're generating data at the rate of 400 zettabytes a year, and the digital warehouses are completely full. So for the first time in history, enterprise storage is 100% sold out through the end of the year in December. And we are in a storage war, a massive capital migration where 4 companies now control the most valuable real estate on earth. We're going to break down those 4 companies, exactly what makes them special, what are their catalysts to win this year, both in the short term and midterm. But it's because the storage war, as I'm calling it, is no longer about who can sell the most hardware. It's about who can solve the data chokehold that we see in the market. AI is generating trillions of tokens of data, and the physical capacity to store those tokens has reached a breaking point. If you think the AI trade is over, you're looking at the wrong chips. Today, we're going to break down the 4 titans that I love to talk about: Micron, SanDisk, Western Digital, and Seagate. And we're going to talk about why they potentially can win in this super cycle. But before we do that, hit like, subscribe to the channel. I love to see all of you coming on board. We've grown our subscribers. Let's keep pushing. Let's see if we can get past 2,000 subscribers to this channel in the next week or so. But let's get started. The first thing I want to do, guys, is jump into, before I talk to the companies, I just want to give you a quick overview about a tool that I love to use. It helps me kind of analyze and look for winners and who's growing and moving. I just want to share it with you. Maybe you use it already. Maybe you use a different tool for type of analysis. Drop it in the comment below what you like to use. But this one is pretty straightforward. It's available for everyone. It's just Yahoo Finance. And why I like Yahoo Finance, and it's one of the many tools that I look at to analyze. But if you just look at markets up here on the right, you can see, and down in sectors below. That's what I like to look at. I selected the technology sector because my focus and what I like to do research and analyze is the technology sector. I love it because it gives you an overall view. So you can look at the market cap of the technology sector of 22 trillion, the weight in the market. So 28% of the total market is based in technology stocks. And you can see the number of companies in industry. And it'll give you trends across one day or 5 years or beyond. And we've definitely seen so far this year, it's been a slower start to the S&P 500. That's used as a surrogate measure for all of these sectors, and a slower start for the tech sector in general, about 5% down here. But when you scroll down here, what I also really enjoy is it breaks down the sector. So all the individual industries within that tech sector, and you can see the weight each one has. So semiconductors making up 36% of the sector itself. And you can see the year-to-date performance, year-to-date return for them. So we're going to jump in and just high level show you why. I'm going to show you why I love these memory companies. And there's some other great places that you could look and research and find companies. But if I jump over to semiconductors, you can see, Nvidia, obviously, is the biggest player in this, Broadcom as well. But if you look at Nvidia, year-to-date return about negative 2%. I jump over to Micron, year-to-date return 44% in this. They make up, like I say, they have a market weight of 463 billion. Big company, probably the 3rd largest in this space overall, but great return. You can see some of the others. If I jump down to information technology, oh, sorry, guys. I always get confused. No, I think it's computer hardware. Computer hardware. There you go. Sometimes you got to find where they put the companies. But again, computer hardware makes up just about 3% of the market weight overall. And these were the other 3 big companies we're going to talk today are. And Western Digital, year-to-date return, 63%. Seagate, year-to-date return, 55%. SanDisk, we know, is the star of the show. The best return year to date of 164%. Unbelievable. And then before I leave this page and we jump into companies, what I also just want to show you is another, like the semiconductor equipment. We've talked about it before. Lam Research, Applied Materials, KLA, they're all having amazing years. So Lam, 37.5% return. Applied Materials, 38% return. KLA, 20% return. So why I like this view is you can start to find little gems in here. Like for this example, so Teradyne, we're probably going to do a video on that just to break it down, but these can introduce you to companies that are showing strong returns for the year or whatever time frame you want to look at. But Teradyne has almost a 63% return this year. Do they get a lot of attention? Are they on your focus? If they are, drop it down and tell me why. But this is a great macro tool for me to just drive into different sectors and just kind of take a look at who's performing and who's not. Software looks great for the one day, but when you dig down and look at Salesforce, -28, you see Adobe on the year, -25. We know software has taken a hit overall. So to me, I would recommend that as a macro tool for you to just look in initially. So Yahoo Finance, it's free. It's open for everybody. Look in the markets, look in the sectors, drive down in those sectors and see if you can identify companies that are winning this year. Do your research and see if it's the right fit for you. It's something I do. I just wanted to make that quick overall recommendation. Hope you liked it. Drop a comment. Let me know if you liked it or not. But now let's jump in and talk about the four giants that are winning, are positioned to win the storage war that we talked about earlier. So let's jump back over and we'll start with, my favorite, what I talk a lot about, and it's Micron. And I just wanted to, each of these companies, I'm going to land on their page that shows their consensus rating on what the analysts are recommending. You can see below what the price targets are for each one. But we know Micron overall has officially, I would say, they've broken through that memory wall. They're probably the most diverse of the four. They cut across both HBM, DRAM, NAND. They're doing some other type of applications for autonomous driving, for robotics. It's a very diversified company with the biggest market cap of the four. That's what we talked to. But their chips are not just storage. They're high-speed transit lanes, so it's called, that feed data for Nvidia, AMD, and they're the backbone. Them and a couple other companies, the backbone for those high-level GPUs that those companies provide. The biggest catalyst, obviously, we heard from Micron is the HBM4 race. The fact that they are now ramping up volume, they are commencing shipments to customers, is a great sign for the company. They're pushing to try to expand on that 10% market share they have in HBM overall and really challenge Samsung for the second position. SK Hynix is far away. We know they're about 50-60% of the overall market. Probably hard to catch them, but can they position themselves ahead of Samsung like they did with HBM3E and really continue to eat up market share in this world? I think overall their biggest winning edge is pricing power. So because they're sold out for the year, they have the opportunity to dictate margins to the industry, and they can shift prices and have that type of pricing power that we haven't seen since probably 2018. I think the other area is that analysts continue to underestimate the HBM die penalty that's out there, which is starving other aspects of the market, PC and smartphones that we talked about, because of just the high RAM costs and the fact that they're shifting their production over into these higher margin HBM products. This is why we're starting to potentially see a massive spike in some of these legacy memory products and consumer products that we all know. And then finally, I think the spot prices for DDR5, are up 130% since January. So Micron isn't just selling chips. They are dictating the price to the entire AI industry for memory. Such a big play. You can see here what the price targets are: 450, 500, 480, recent price targets. And we have 43 analysts, 38 of them are saying it's a buy for Micron. So let's jump over to the next, which is, a lot of people will say, is the belle of the ball, really, is SanDisk. Since they've split off from Western, what an amazing company you have. You look at the price targets below for SanDisk. We know SanDisk is currently trading about 6 You can see in the top of your screen there, 626 a share. Analysts have this price target anywhere between 800, I'll say 7, Mizuho's at 710, but up to the bullish of the bulls and over 1,000, a price target of $1,000 per share for it. And why is it? It's because SanDisk is the pure play flash king. While others are kind of dealing with legacy hardware, SanDisk has made the focus that they're going to have their entire focus and position in the market to be on the fastest enterprise SSDs on earth. So SanDisk is their new high density flash is currently right now being qualified by 2 major hyperscalers, and that's Google and Amazon, for their infrastructure builds in 2027. That would be a massive win for SanDisk. And once those volumes hit the volumes that we're going to see in mid 2026, SanDisk becomes the primary supplier for all AI training lakes. So their winning edge is agility. They're a standalone company now, and every dollar of profit is reinvested into flash R&D, leaving their competitors behind them and working constantly to try to play catch up to SanDisk. And we know that the NAND prices are projected to jump 55% this quarter alone. And so as a standalone company, SanDisk captures 100% of that margin without having to share money with Western or having the drag, let's say, of the legacy HDD division. They're a standalone company that continue to soar and drive. So I love SanDisk as well. Great opportunity. High price point right now for a lot of investors, but if you look at where this stock could go, there's significant upside in it. So make sure it's the right choice for you if you want to jump in and get SanDisk. Let's jump over to the third company I want to focus on today, which is Western Digital. You can see Western Digital is trading at $281 a share right now, where they closed down for the day on Friday. But if you look at the analyst rating, 20 analysts buy. We have 6 that say hold and 0 sell. And the price targets here range from Susquehanna is at 285, so just a little bit of upside, but across the board, Cantor Fitzgerald at 420, and a lot of the others, Mizuho, Morgan Stanley, in that mid 350 range with significant upside for Western. And why? So Western, as you know, is the high margin pure play HDD leader in this storage war. They are the the masters of cold storage, where 80% of the world's AI data actually lives once it has been trained. Their big catalyst right now is the Ultra SMR, which is the shingled magnetic recording, and their heat-assisted magnetic recording transition. So they're transitioning the top 7 hyperscale customers to 30 terabyte drives currently. And their energy-assisted perpendicular magnetic recording, and their Ultra SMR, as I mentioned, that current tech offers a better total cost of ownership for customers than SSD, or for them than SSD, and it's massive for data archive. So earlier this month, on February 3rd, Western unveiled their 40 tetrabyte Ultra SMR. AI generates, as you know, massive amounts of cold data information that must be kept but isn't used every second. Western their new drives reduces energy consumption by 20%, making them the only sustainable choice for massive AI archives. That sustainability could be a huge play for Western, because we know a lot of the AI build out is starting to come under some political pressure around energy consumption and just the costs in general. So this could be a real key advantage for them. Their winning edge, honestly, is stability. They now boost the more predictable high margin revenue stream without the boom bust cycles that we saw with Flash after they transitioned or separated from SanDisk. And their shift to built to order model has eliminated the inventory glut that we've seen with Western in the past. Their revenue is expected to hit $12 billion this year, which is double the revenue of 2024. Western is a great company. You may think it doesn't have as much upside, but there's significant play here, and they have a lot of competitive advantage. So let's jump over to the last one, which is Seagate. Seagate trading at 425, about 426 a share. You can see the analyst recommendations there, right around, we'll say at 440, a little bit upside, up to 650 for Cantor Fitzgerald with some significant upside overall. And Seagate is betting the entire farm on the heat-assisted magnetic recording. They aren't just making bigger disks. They're using lasers to write data onto smaller surfaces that we ever thought were possible. Their biggest catalyst is the Mosaic 4 Plus hammer, which is in the transition to that. So Seagate is now shipping laser-fired 44 terabyte drives. By second half of this year, these high-margin hammer drives will account for over 50% of total shipments. So they're effectively doubling their profit per platter. Their winning edge for Seagate is density leadership. If you want the most data in the smallest physical footprint, you go to Seagate. If data is the oil of AI, Seagate owns or builds the barrels to fill that oil. As AI models require exponentially more data holding, Seagate's laser-assisted recording is the only tech that can keep up. So that's kind of the cover of the four I wanted to just jump through. And I don't know who you guys think will win the storage war. They all have capacity to win and grow profits. But who do you think is the single company that you're keeping your eye on the most? Consensus targets, as I went through those consensus targets and show you, just keep in mind that they often lag behind the supply-demand inversion. If these companies continue to report 100% utilization and sold-out inventories, the consensus will be forced to chase the stock price upward. All four companies that we discuss all benefit from the same macro trend. AI generating unprecedented explosion of data requiring high-speed memory and high-capacity storage. This structural shift is extending memory pricing power and demand beyond the typical semiconductor cycles. The consensus targets, like I said, are lagging. They're based on models like that are looking at cyclical hardware. But in 2026, storage is a utility. When SanDisk reports their earnings on May 7th, and they demonstrate that their margins are 65% plus, and when Micron continues to raise the HBM4 prices, and when they show their revenues on March 19th, these price targets won't be just met, they'll be obliterated. The storage wars have just begun. So, guys, what side of the storage wall are you currently on? So remember, the retail crowd, we hear a lot of noise about GPUs, but the smart money for people like you that are listening to this channel and investing in kind of memory stocks and following what's happening in that world, these are the companies that are moving the AI demand. They're moving it forward. They're breaking through the bottleneck we see, and they're the ones that are helping feed the infrastructure that keeps those GPUs going. So memory is long, memory is bullish. Let me know your thoughts below. Hope you enjoyed the video, guys. Talk to you soon. Take care.